Good morning, viewers. It's Monday morning, March 3, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Stocks shook off another bout of volatility spurred by geopolitical anxiety and a White House shouting match to rally at the end of a jittery February. Equities gained after being hit with several twists and turns. Wall Street ended higher on Friday after a choppy trading session. By the closing bell, stock indexes recovered and finished more than 1% higher. The S&P 500 climbed 1.59% to end the session at 5,954 points. The Nasdaq gained 1.63% to 18,847 points, while the Dow Jones Industrial Average rose 1.39% or 601 points to 43,840 points. Yet, all three major indexes notched losses for the month, with the Nasdaq Composite's 4% decline leading the retreat. The Nasdaq in February had its deepest month loss since April 2024. The S&P 500 fell 1.45% for the month, and the Dow lost 1.6%. The Russell 2000 index of smaller companies veered even lower. Investors have white-knuckled their way through earnings season and a mounting pile of data suggesting the US economy is slowing. Even on days like Friday, when the stock market has moved higher, policy uncertainty from the White House has left traders on edge. On the last day of the month, US stocks seesawed after a testy Oval Office meeting in which President Trump told Ukraine's Vladimir Zelenskyy that he is gambling with World War III. Major indexes had climbed about 0.5% in the morning before careening lower when Trump told Zelenskyy to wind down his country's war against Russia. Zelenskyy and Trump traded verbal blows at the White House before the world's media. The Ukrainian leader left the White House without signing a much wanted deal between Ukraine and the US over the joint development of natural resources, a mineral rights deal seen as crucial for retaining US military support. Trump said Zelenskyy can come back when he's ready for peace. Earlier, a Commerce Department report showed inflation moderated last month. The Fed's favor inflation gauge showed prices rising 2.6% in the 12 months through January, excluding volatile food and energy costs. However, consumer spending, which accounts for more than two-thirds of the economy, dropped 0.2% after an upwardly revised 0.8% increase in December last year. This could complicate the Federal Reserve's deliberation on monetary policy. Spending came in lower, attributed to a cooling economy, which presents a dilemma for the Fed in the sense that there is still inflation and an economy that is moving lower. However, when you add these together, that equals stagflation. Friday's report is important for investors trying to gauge the next move for the central bank after policymakers reiterated a hawkish stance. Every sector of the S&P 500 posted gains. All 11 S&P 500 sector indexes rose, led by financials up 2.1%, followed by a 1.8% gain in consumer discretionary. In stocks, Dell dropped 4.7% after the PC maker forecast a decline in its adjusted gross margin rate for fiscal 2026. Peer HP Incorporated fell 6.8% after its quarterly profit forecast missed expectations. Nvidia and Tesla rose almost 4% each and lifted the S&P 500. The CBOE Volatility Index, also known as Wall Street's fear gauge, touched a one-month high and was up last at 21.26 points. In other Friday's action, investors bought government bonds around the world, pulling down yields on the US note. The 10-year Treasury settled Friday at 4.228% after its steepest one-month decline in more than a year. Oil prices faded in February. Benchmark US crude futures closed Friday at $69.76 a barrel, down 3.8% from a month ago. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.